Good morning, everybody. It is November 30th. We have 1 month left in the year, and we can burn everything that has 2022 written on it. And we are 2 months into me emphasizing to focus on these SPX spreads. 2 months. Started on my birthday, September 29th, when I turned 50. And of those sessions during the 2 months, the 3 losses that are losses were being cocky. All 3 of them. I take that back. One of them, that one there on October 28th, that was completely out of sync because that one was the Friday after all the companies had reported earnings. It was the final Friday of October, and as you remember, I should pull it up. I don't have it up already. We had that massive rally that we had there on that day on Friday, and that trade did not work out. Other than that, everything has worked out quite well. Yesterday, in fact, was fantastic. Had the safe spread, 39.25, 39.30. Had the risk spread, 39.50, 39.55. You got up to nearly $3 on the risk and over $1.60, $1.50, $1.60, $1.25, all over there on the safe spread. Both of them paid out. Both paid out as we closed there at 39.57.63. Both of the trades worked out. Both of them worked out. Both of them paid. Love every single one of you. Today is a big day. Today is the last day of the month. Nothing to really look back to as to history as to last day of the month's transactions and volatility. But the Eurozone just reported their CPI, and it is 10% below the 10.4% forecast. Same thing like we got over there in Germany. The main increase in their CPI was energy. After energy, it's alcohol and tobacco. So again, energy is still a very significant product right now, and it's going to continue to be like that. For us, later on this morning, as we get closer to around 8:30, we're going to get some pretty important data, and the big data that we're looking at is going to be GDP. GDP for Q3 is going to be coming out. We are going to getting some PCE, some retail spending, some auto inventories, wholesale inventories. Everything's just kind of jumbled up. We get the Chicago PMI number there at 9:45 in the morning. We got the JOLTS jobs. We have our ADP non-farm employment coming out as well in the morning at around 8:15. And then later on today, we get crude inventories, and crude has been an absolute dream come true over there in the futures room, dragging these. He is fucking crushing it. We had a 3.4 point run the other day off of that big drop. Absolutely amazing. If you're trading futures and you want to get into futures, get over there, talk to me. I'll jump onto it all day long with you. But here is where it gets important here. At 1:30 today, Jerome Powell is scheduled to speak. Now, he is scheduled to speak at some event. Don't know what the event is. I saw it somewhere. Don't really care what the event is. But we are not guaranteed that he is going to be making any kind of comments about interest rates, about inflation, about the markets. We have no assurity that he's going to be making any comments like that. So we need to be very well aware of it come 1:30 in the afternoon that he could say something, but there is no guarantee that he will. And we have had times in the past when, because he is the big head, big dick on campus, he didn't make any comments. And he didn't have any written transcript that was issued prior to his speaking. So something to be aware of, But what we're going to do, I'm going to bring you over here into the charts and tell you why I unfortunately cannot be bearish right now. I can't be bearish. This was why I actually went out and I bought some December 30 Apple 150 calls. I sent out the email yesterday. You had to look at it. This is the 4-hour chart of the indexes themselves, the Dow Jones, the SPX, and the NDX. The NDX, the NASDAQ, has already breached oversold. The SPX is trolling right above that oversold indicator, whereas the Dow, since CPI, has not been as low as it is right now on this little dip that it's had. It's still well within 10% of the all-time highs. We have not touched that bear market line since we broke above it on the CPI day with the gap up, and you are still resisting that minus 30% from the all-time highs, the 50 retracement from the COVID lows over here on the NDX, which I'll show you when we go on to the charts, because what I've got here for you is a 15-day view. So you're seeing this big spike up, which was CPI back on November 10th. That's our big spike up that we had. And since then, we've done nothing but just troll sideways. We've been supporting on this 395 with that one little breach below it last week, which was our opportunity to buy going into Thanksgiving. And we came up and we revisited up there into that gap that hasn't been filled since well back in August. Right there to revisit those highs over there on the SPY. On the QQQ, much different story. On the QQQ, you had your big gap up over here on the CPI, and since that spike early in middle OPEX week of November, all it's been doing is just kind of flagging down here, which, again, not really bearish, but not bullish in any way, shape, or form. You're supporting on that 38.2 retracement from the lows back in October, holding that 279. Finally got a visit to it earlier this or late last week. No, sorry, earlier this week. Yesterday. Finally got a visit to that 38.2 retracement, which is good, very healthy. But again, we're still resisting up here at this 286.10, 286.48, where we need to see that get broken up above so that we can actually start targeting that 100-day moving average, start looking at that 294, and then really start progressing into middle of December for that 296 area. Again, it's all about the NASDAQ weighted stocks, which was why I made the decision to go with Apple, because if we are going to get that bull run, the top weighted stock is going to do most of the work on that. So again, that's why we're definitely looking at a hedge using Apple rather than going out and paying an exorbitant amount of money for QQQ calls. This is the Russell 2000. And again, CPI, big spike up, gap up. And since then, it's just been trolling around right on that November 9th when Joe Biden was crowned king and Pfizer came out with the cure, 181.73, 25% from the all-time highs where it is, and just trolling around in this area below the 200-day moving average, but above the 100-day moving average. So again, not bearish, but not as bad as the QQQ, which is the biggest weight of all the indexes. And then we come over here to the king of kings, the Dow Jones. And the Dow Jones is doing everything. Okay, you want to sell? No problem. Bring your money over here and put it into the Dow Jones. The Dow Jones is still continuing to post higher highs, higher lows. And like I said, I mean, when I was looking there on Friday, I cannot find a reason to risk buying puts on the Dow Jones despite the Dow Jones 200-day moving average is down here where the CPI low is, down at 324. And we're looking over here at the SPX where the 200-day moving average is up here at 404. So yeah, I can't get bearish on these indexes for now. I just can't do it. And again, you come over here onto the VIX. This is the VIX during the exact same time frame. You know, you got your CPI gap down, then you had your little bit of a climb, and then you had that massive decline over the last few weeks when volatility just went to nothing. Our intraday ranges on the SPX went below 40. And again, we're still below 40. Yesterday was a below 40 range day, even though it kind of started shaking people around because everybody's getting antsy. Everybody's starting to get agitated that we're not having these volatile moves that we were used to prior. And again, with the VIX and the way the VIX looks, the 200-day moving average up here, all the other moving averages well above that. I am expecting to see that we get a drop on the VIX back into that gap down below 2102, and then we'll have an opportunity to perhaps see a little bit of a shake and a little bit more of a dip after we get a little bit of a bounce. But again, coming back onto your wider time frames, how oversold that they are, specifically the NDX on the 4-hour, I'm encouraged to expect to see the upside, but you are going to need some kind of a catalyst for that. We have the jobs report on Friday, CPI, and the FOMC meeting are 2 weeks away, not 1 week, 2 weeks away. So perhaps we get a comment out of Powell today. And if anything was going to say something, the charts are saying Powell's going to say something. So we'll see what we get. But yep, that's where we're at. And I will see you guys in the chat.